Welcome to Terminologies in Forex Trading, Class 2. In our last class, we made a list of Forex terminologies, and we left off at number 12 in our Forex terminologies. Here's a quick run-through, class recap. 1. Long position or a buy. 2. Short position or a sell position. 3. Bid price. 4. Ask price. 5. Spread. 6. Commission. 7. Swap. 8. Gapping. 9. Pips. 10. Pipettes. 11. Lots. 12. Micro lot. Class recap done. Let's head back to having our snack for today. Forex terminologies for today. 13. Mini lot. A mini lot is a currency trading lot size that is 1/10 the size of a standard lot of 100,000 units, or 10,000 units. 1 pip of a currency pair based in US dollars is equal to $1 when trading a mini lot, compared to $10 when trading a standard lot. Mini lots are common lot sizes in Forex. 14. Nano lot are 1/10 the size of a micro lot and 1/100th the size of a mini lot, or 100 units of a base currency. 1 pip of a currency pair based in US dollars is equal to just $0.01 when trading a nano lot. 15. Leverage. Leverage is a way for an investor to increase their trading power and manage a greater position on the market with a nominal investment. An online broker may offer leveraged trading for up to 30 times the value of a trader's initial investment. 16. Margin. The minimum deposit needed to maintain an open position. For example, with an open position of $150,000 and leverage of 30, the required margin is $5,000. 17. Margin call. Margin calls are a major part of risk management. As soon as your equity drops to a percentage of the margin used, your Forex broker will notify you that you need to deposit more money if you want to maintain your position. 18. Risk management involves the use of strategies in order to help control or reduce financial risk. An example is a stop-loss order, which is used to potentially minimize losses on a trade. 19. Stop-loss or SL. A stop-loss order is a risk management tool allowing a position to be closed once it reaches a specific preset price. This can protect against further losses on an open position if prices continue in an unfavorable direction for the investor. Please note that placing a normal stop-loss order does not guarantee you will be filled at that particular market price due to slippage. 20. Take profit or TP. A take profit order is a risk management tool allowing a position to be closed automatically once it reaches a specific preset profit goal. This can protect against profits being lost in an unanticipated reversal of price direction before the investor can close the position. 21. Profit or gain. A positive amount of money gained for closing the position. 22. Losses. A loss from closing a long position at a lower rate than opening or from closing a short position with a higher rate than opening. Losses may also occur if the profit from a position's closing was lower than the broker's commission on it. 23. Unrealized profits or losses are referred to as floating profits or floating losses. When it is profits that haven't been booked, same also applies to losses. When losses or profits are yet to be booked, they are referred to as floating. As long as those positions are open, they are floating. 24. Booked profit or loss. This is a gain or loss of an already closed position. All positions that has been closed out is often referred to as a booked position. 25. Broker. The market participating body, which serves as the middleman between retail traders and larger commercial institutions. 26. ECN Broker. A type of Forex brokerage firm that provides its clients direct access to other Forex market participants. ECN brokers do not discourage scalping, do not trade against the client, do not charge spread, low spread is defined by the current market rates, but instead charge commission for every executed order. 27. E.C.B, which is the European Central Bank, the main regulatory body of the Eurozone's financial system. 28. EA stands for Expert Advisor, also referred to as a Forex robot, an automated script that is used by the trading platform software to manage positions and orders automatically without, or with little, manual control. 29. Floating leverage, a leverage that changes depending on the total size of open positions. 30. Hedging, maintaining a market position which secures the existing open positions in the opposite direction. We would draw today's class to a close at this point. See you in our next class.